Let's find some day trades, swing trades, and option trades. Hello, traders. It is Wednesday morning. We're almost 2.5 hours into trading. July 1st. Nice start to the month. Nice start to the quarter. Let's take a look at what we're doing here. You can see here how we had the S&P 500. Yesterday, we had this dip in the afternoon. I explained to you. We had what looked to be a bullish trend day setting up. Market higher, higher, higher. Please watch that video. You'll hear me say, I think we're going to get an afternoon dip. That video was recorded in here. That afternoon dip is going to set us up with a very nice late day buy. So please confirm that. Go back, watch the video. We have been nailing the market. This morning, I also mentioned to members, I said, look, we've got tail above body, tail above body, tail above body. We had the market breaking out right here, and that bearish hammer, I said, uh-oh, that's a warning sign right there. We're going to get a little bit of a pullback, which we did. Off of this pullback, I said, now what I want to see is I want to see the market rally a little bit, but to fall short of making it back up to that high. As soon as I see it stall before it can get there, I've got a bearish 1OP cross, and I'm going to be looking for the market to pull back. Right in there's your upward sloping trend line, and we had about a 7-point gain on our S&P. Now we had a bullish cross on the 1OP indicator right here. That set us up for some nice longs. There we go. This indicator is all you need to trade the S&P futures. That's what I give commentary on all day long in the chat room. We use stocks as a surrogate market position. So when we're looking for shorts, we're shorting stocks that are relatively weak. When we're getting long, we're looking for stocks with relative strength. Now, I want to mention that in Twitter, I have a Twitter feed, and I'll put a link in the description of my YouTube video. Please go in and follow me on Twitter. I'm going to start posting trades in Twitter. And right here, you can see exactly the chart that I was referring to earlier. And let's see if we can bring that up. Here's the chart that I was mentioning. Bearish hammers, upward sloping trend line. Watch for a failed bounce and a breakdown. Okay, it's exactly what I just mentioned to you. We had that bearish 1OP cross. This is the type of information that you'll get there. That was worth a 7-point gain on the S&P 500 futures. Nice, easy trade. You'll also get my pre-open market comments, and you'll know exactly how I'm positioning myself for the day, what my forecast is for the next few days, for the next week if I can look out that far. So I'll have specific instructions for swing traders and specific instructions for day traders. So please click that link, go to Twitter, follow me, and I will provide you with some nice early morning trades. It's much easier for me to just go in, post a chart, post quick comments, boom, I'm in, I'm out, I'm done, and then I can continue to trade. These videos that I record for YouTube take longer. So let's get to it. Let's see what the market's doing right here. I'd also mentioned to traders in my early morning comments, we are in a pre-holiday trading environment. The volume is going to be very light. We had a couple of major economic releases today. ADP came in better than expected. Last month, they had reported that there were 237,000 job losses, I believe. They revised that number up to a positive 3 million. That now is consistent with the unemployment report that was posted last month. There was a bit of disparity there. So we can expect a pretty decent number tomorrow. The jobs number should be pretty good. We had ISM manufacturing came in today at 52.6. That was better than expected. Analysts were looking for a reading somewhere around 49.2 was the consensus, much better than expected in the manufacturing sector. So we've had decent economic news, and the market has been able to challenge this downward sloping trend line on a D1 basis. D1 means daily. You can see that nice, tight, downward sloping trend line right there. Boom, we're right above it. Now, we've also tested the 200-day moving average twice in the last few weeks, and you can see that. We tested it once, but we didn't just one and done. 1, 2, 3 tests. And we bounced off of it. Okay, that support seems to be there. Now the market gradually faded down 1, 2, 3, 4 tests of that moving average, and you can see how we're bouncing off of it, and we're through that downward sloping trend line. What happens heading into earnings season is that buyers tend to be fairly engaged. There's usually lots of good news. The front end of earnings season is loaded with the strongest stocks. So you've got the mega cap tech stocks that are going to be reporting. No one wants to be short the market when you've got the likes of Netflix and Amazon and Microsoft, Apple, Facebook all reporting earnings. So I believe that you're going to see a pretty decent market bid to the market, and you're going to see a nice little rally. By the way, the unemployment benefits were extended through the PPP program. That was $600 that were going to recipients of unemployment benefits. The $600 is subsidized by the government. So that has been extended until August 8th. I've been mentioning that this was likely. It was due to expire tomorrow. That's been extended. That's good news for the market. The market loves it when people have a lot of money because then they tend to spend money. So I don't like the macro backdrop, quite honestly, into August, the middle of August, late August, September. I think we're going to start seeing some problems if this economy is not back on track and if the coronavirus has not been contained, because we've got lots of states who are starting to shut down. And right now we had Arizona, Texas, Florida, some really big states. In fact, the 4 states that have just recently gone back to phase 3, they account for about 30% of our GDP growth in the US. And of the states that have either stayed flat, meaning they're not going to continue to reopen, or that have gone backwards, it's probably closer to a 40% of GDP number. That's a big number. That means that a lot of the country is not back uh, at work, or at least that the economic activity is going to be relatively subdued as they continue to shut down. So it's not a complete shutdown, but instead of going to phase 4, they've gone to phase 3, and they're going to be staying there for a while until they can get a handle on the virus. So I don't see that as a good sign. I think that people are a little bit nervous again. They're being very, very cautious, and this is probably going to flow over into their spending habits. They're going to be wondering if their job is secure once the PPP runs out, and that means that they are not going to be as likely to spend money. All of this will be fine for the next 2, 3, 4 weeks because we've got earnings season coming up. We've got the mega cap tech stocks reporting. We've bounced off of this 200-day moving average a couple of times. We've seen additional stimulus coming in, so no problem in the short term. But in August, if we start to see the economy struggle and we get any bad economic reports, it's not going to bode well for the market. Also, I'd hope to see better out of China. I've mentioned the Dragon Boat Festival. It's a big one for them, that their attendance was down 49% year over year, and their revenues from that were down 69%. Now, they've got a 2-month lead on us. It tells me that China's recovery is sluggish too, and that consumers are not getting right back at it. They're being very, very cautious. So this is going to take a lot longer to resolve. And the longer it takes to resolve, the closer we get to some potential credit problems as businesses have to stay shut down longer than expected, and as their revenues really struggle to recover. So I've given you more information than you might have wanted, but I wanted to give you what my short-term bias is and what my longer-term bias is, because there's a little bit of a divergence. Short-term, the next 3, 4 weeks, I think we're okay. I think the market flatlines, it tries to grind higher, but as we get towards the end of August, September, I think we're going to have some problems, and we may actually breach these major support levels. But until then, I'm not trading it. I'm not playing it. I'm in the here and the now, and this means that we need to focus on selling out of the money bullish put spreads that expire in less than 3 weeks. Yesterday, I showed you a GLD spread. That's pretty nice. That's holding up pretty well. Gold is retracing a little bit. Take a look at that. And I'd mentioned selling the out of the money July 10, 163 put, buying the 162 put, doing that for a credit of 18 cents. You're able to get that trade done. Take a look at that D1 chart. You'll see the major technical breakout right there. running at about the 164 level. 163 puts us below that breakout, so I think we've got some nice support, some nice cushion. Tesla, I also showed you a bullish put spread yesterday on Tesla, and I'd mentioned selling just below the breakout here. So that puts us at the 1,000 level, selling the 1,000 put, buying the $995 put. It's a $5 spread. We were looking to get $1.20 for it. Easily was there. So that spread is in super nice shape as Tesla continues to power higher. I like Tesla. This is a very nice breakout. So if you bought the stock yesterday or you sold that bullish put spread, you're in great shape. So let's take a look at what we might have for today. You saw Netflix earlier. I like it. All I had to do was go into one search, this pop bull search. Didn't even need to go any further than that. You can see wired CW, big rally, stock powering to a new high of the day, massive breakout here. You can see that breakout above the major moving averages, bullish hammer. This stock is really powering higher. I don't know that I would want to chase it right here for a swing trade. I'd like to see a little bit of a pullback, maybe into this candle somewhere to the middle of the body, but FedEx, big number. Not going to play that. SQ is grinding higher. I really like this compression here. I like the breakout. SQ would be one that I would highlight for a day trade today and a possible overnight position. I'd like to buy a pullback. I don't like chasing stocks. It's super hot right now. Netflix looks really good to me. Look at that powerful, powerful move. We're going right through the high, blew right through it. So I do like Netflix also. Keep going down the list here. PINS, daily chart, bounced off the 200-day moving average. That was also a horizontal support level. So that looks pretty good right in here. You could probably look to sell a 2050 put and buy the $20 put. You'd want to get a 20-cent credit for that. Let's take a look at it, see if we can go out to July 10 and get that type of credit. So I don't think we're going to be able to because they're really draining premiums right now. You can see the 2050 put, which is below the 200-day moving average, is only 8 cents bid. Not going to get that credit there. And if we go out to maybe the July 17, let's see what we can get there. 2050. That's a nickel bid. Offered at 9 cents. We're not going to get the credit that we need. Got to take a pass on that one. Got to stick to your guns on these. TWLO. I do like this stock. It's been nice grind higher, higher, higher. Starting to break out right in here. I do like selling it out of the money bullish put spread on this one. I don't think the options are super liquid on it. You can see that this was horizontal resistance at $210. So now on that breakout, that becomes support. 1, 2, 3, 4, 5 tests of that support level at $210. Stock is at $226 right now. Let's see if there's a decent credit for that. So TWLO, see if we can go out into maybe the July 10 expiration. And we're looking at that 210 strike. So we'd have to go 210 and we'd have to go 207.50. And there you can see that there is a 6 cents bid offered at 67 cents. I need to get 50 cents for this because there are 2.5 points between the strike prices. So let's move it up, and I got a tiny little one lot loaded here. Let's see if we can get it done. Good for the day. Submit it. Open order, no fill. I like that spread. I think that's a nice spread. I believe that $210 support level is going to hold up just fine. Well, how can you be that confident, Pete? Well, you can see we're in a daily chart in the SPY. You can see that TWLO has that same time frame showing. So in the course of the last week or so, down, 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 down for the market. Stock, flat, flat, flat. And as soon as the market finds support, zoom. That is relative strength. And I have people ask me, well, Pete, everything you show isn't it day trading? I'm not really a day trader. How do I use your system for swing trading? It's the same thing. The only difference is you're changing your charts and you're changing your time frame. So if I'm looking for a trade that's going to last 3 weeks or 2 weeks, I'm not looking at a 5-minute chart. All I'm doing is taking that same technical analysis, looking for that same relative strength, and instead of looking at a 5-minute chart, I'm looking at a daily chart. All the other technical patterns that we look at are the same. So it really doesn't matter. Option Stalker's great at finding both. And here you can see orange line greater than 0. That means that it is strong relative to the market, and we can search for these stocks. If I wanted to find a stock and that were the only criteria that I wanted to use, I'm going to clear the upper and the lower in the custom search. I obviously want good option liquidity. That's very important to me, especially if I'm selling out of the money bullish put spreads. If I wanted to just look for relative strength across multiple time frames, click the daily, click the 1 hour, click the 4 hour, the 2 hour, just click it all the way across. Hey, show me something that looks great across everything right now. There's my list. These are the stocks. If I clicked every single one of these, you would see some really, really good charts. So all I have to do is I have to wait for the market to line up and to give me an indication that it wants to move higher. We have that today. We've bounced off the 200-day moving average again. Now we're through this downward sloping trend line. If I'm a swing trader, I'm getting pretty excited because now I've got reason to believe that I have support close at hand and that the market's going to continue to have upward momentum because it has gotten through this downward sloping trend line. So there should be some nice follow through on the upside. Okay, so stage one. I like the market here. I want to be long. Okay, great. Now what do? Now we go and we find those really strong stocks. And this is your list right here. So we can click through a couple of them, but I don't see really needing to go through and look at all these right now. These are great stocks. I'm going to keep this up for just a minute. That's how we find them. That's how we do this every day. So in there, you're going to see Garmin and Microsoft. Let me go take a look at a couple of these. And we'll see what we've got. ABBV, look at that. I'm just going to go down the list. I'm just clicking down the list. This BMY could be pretty nice if it gets through these two major moving averages. CHGG, DOCU, EA. Look at these charts. This is nice. See, EMPH is kind of volatile. I didn't like that bar right in there, and I showed you that one a few weeks ago. So forget about ENPH. Too volatile. ETSY. What a strong stock. Did you see how easy that was for us to find those? Super, super, super easy. That's what Option Stalker does is it helps us find these stocks. So the market looks pretty good in here. I like that it's been able to break out above this downward sloping trend line. I'd like to see it close above the $310 price level, which it is at right now. We could take a look at the high from yesterday. You can see the high yesterday on the SPY was right up in here at that $310 level. Getting a little bit of a grind higher and higher. Looks like we're going to challenge the high. I don't think we're going to break out to a new relative high today because this resistance has been pretty firm in here. We're in pre-holiday trading. Got a big jobs report coming out tomorrow. Traders are kind of squaring off their positions right now. I don't see that we're going to go anywhere fast. So I think we stay in the range today and we see how the jobs report comes out tomorrow. And perhaps we move higher and we have another leg higher tomorrow on a decent jobs report. ADP was better than expected. ISM was better than expected. So I think that we're looking at probably a positive move tomorrow, Thursday, and then a pretty quiet Monday when we come back. So that's how I see things playing out right now. Again, the stocks that I really like that TWLO. I like that spread, selling the 210 put, buying the 207.50 put, doing that for a 50-cent credit, expiring on July 10. And I also like SQ. I also like NFLX. Pop Bull was the search that I used in Option Stalker. So please make sure to watch for that link in the YouTube description below. It's going to have the link to my Twitter channel where you can go in and you can see stocks that I'm trading. You can also get my pre-open market comments. If you like the content, please give it a thumbs up in the YouTube video. Make sure that you subscribe to this YouTube channel and turn on your notifications. Then you'll never miss one of these videos. And I promise you, I'll always have some great trades in them and lots of education. So look for longs right now. Really try and spot that relative strength. Those are the stocks that you want to be long. Don't be long the stock. Instead, sell out of the money bullish put spreads below technical support. Market is still moving sideways right now. Not a lot of upward momentum, so I see this as a fairly low probability trading environment. Thank you so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.